What's good, guys, and welcome to today's video. My name is Bossman, and I want to welcome you guys to today's video. This is going to be part one of a series that I find really important for all beginner traders, and also for traders who've been trading for a while but haven't found their consistency really, because they keep jumping from one strategy to another in search for uh, a strategy that is going to meet their every need, or rather they've missed out on every other thing and so they're looking for something else. So without talking too much about that intro, let's get straight into the video. As you can see, the video is building your own trading strategy. And so what we shall do is I shall highlight what building a straight trading strategy involves or revolves around, and then we'll be able to work around from there. So hope you guys will enjoy the video and stick around. Leave a comment if you have a question and I'll be sure to answer them. Also, you can hit me up on my Instagram at BossmanFX for further details on like how to break down the charts and stuff. So welcome, welcome, welcome. So first and foremost, what I would term as a trading strategy. This is the overall approach that someone who is either new to trading or is already trading, is using. The approach that they will be using to approach the markets in one or another, so that they can be able to get money out of the markets. So I would break this into three separate systems. Okay, so the first one is the trading system. This one is what each and every other person on Instagram is usually looking for, or each and every other person on Google is usually searching for, and it is, what trading system can I find that is useful for me, that I can be able to make money out of. That's why you'll see people jumping from one trading system to another, because apparently this one wasn't making them enough money, and so they have to switch to the other one and the other one, and so on and so forth. So the first system that I would talk about is the trading system. So this one is one that involves what techniques that you're using to make money off the market. And then the second one is the money management system. And this one very is talked about very minimally from most of the people that I find on their pages and on their blogs and stuff. It is money management. And this is actually a really important system that, if followed properly, regardless of what kind of win rate you have and risk to reward ratios that you have, this money management system is what keeps you afloat, because each and every trader has to be conversant with how they manage their risk for their returns to be good at the end of the day. Because at the end of the day, if you have the perfect trading strategy that makes 2 losses maybe out of 10, but in those 2 losses you end up risking more than what you were risking in all the other trades that you won, you'll end up on a losing streak rather than on a winning streak, and that will be blamed on your money management system, and we all wouldn't want that to happen to us. And the third one is the emotional management system. This emotional management system is basically your trading psychology and everything that revolves around that, because you know for sure that if you end up taking a trade based off your fear of missing out of the market, that today you've not taken a trade, and so I need to force something so that I can be able to make money. Such kind of approaches to the market end up being emotional barriers that make you lose on your target that you have set based off your trading. And so for today, what I'll be doing is I'll be talking about the first one, which is the trading system. And something to highlight even before I go deeper into this video is going to be broken down into a series of videos that will seek to highlight each and every aspect of a trading strategy and how to build one, rather than having everything bundled up in a video, because my intention is to have the videos as short, 15 to 30 minutes. So if I'm able to bundle it up, it'll be about 2 hours, which is not actually proper for the people who have short concentration span. So if I'm to cover up, part of, let me just cover up this part that we do not need for now, and focus on, if we're to do that and focus on what is actually really going to help us today, then we'll see that we'll be covering the trading system. And even before I talk about, and even before we talk about this part of the trading system, what I want you guys to take note of is this section here. Let me just highlight this section here. So knowing who you are. If you have to build if you're building your own trading strategy, first and foremost, you have to know who you are. And funny enough is most people don't know themselves. And this is not in regards to like what you eat and stuff. This is based off your personality. Okay? Your personality is like, how risk tolerant are you? How patient are you? How disciplined are you? And things like this show you what kind of a trading system you should be looking to apply. First and foremost, under the trading strategy, you can be able to, a trading system, you can be able to find a trading system that is more scalping dominant, swinging dominant, and more like the day traders. And so the first thing will be, how patient are you, such that how long can you hold a trade? Okay, how long can you wait for a trade, and how long can you hold a trade? That would be the first thing that I would see. Because now you see, if you can't hold a trade for more than a week, more than a day, there's no way you can be a swinger, and there's no way you can be a day trader or a scalper if you cannot hold trades more than a day. And also, if you are up for, and I put this in quotes, quick profit, then swinger and a day trader wouldn't be for you, because swingers and day traders take a longer period of time for their trades to take profit, because they have a wider pip margin than the scalper, because the scalper is looking for 5 pips to 10 pips every trade. So once you realize that, you'll know that what you're looking for is, do you know who you are? Once you know who you are, you'll know what kind of trading system you'll be looking for. Also, in knowing who you are is knowing your availability. And knowing your availability is all about, am I available enough for the charts? If you're working or if you're in school, you probably don't have all the time in the day to check on your charts and do this. So scalping wouldn't be for you, because for scalping you need to be on the charts almost 24/7. And this is debatable, because I'm not a scalper, I'm more of a day trader, but I find like when I was scalping, I was having more time on the charts, because you have to look for various opportunities that might pass you easily. And then now, once you know your chart availability, you'll know what system you can adjust to, like to work for you. Let's say someone who is available over the London period, that person can capitalize on simulating and practicing and finding a strategy that involves around the London session. Maybe I can give an example as the London daybreak strategy, but all those things are just things that I've talked about, I'm talking about, but I haven't used. I was just looking for an example. So for someone who is available over London, they can use a London daybreak strategy. They can also trade the London session, because it has volatility. So if they have the London period to spare, they can be able to work around a strategy that will be able to tackle the London period. And that is basically the introduction to building a trading system, knowing yourself. And so, fine, you have now known yourself. So the next thing that, let me cover this up. So you already know yourself now. So how will you structure your trading system? What will you be looking for when you're starting to determine what kind of trading system you'll be looking for? And that's where we'll come to this point now. So when you're looking for a trading system, what people are usually looking for is how they'll make their entries, how they'll make their exits, and how all these other fundamental things, the technical stuff, is going to affect their entries and exits and so on and so forth. Put this into perspective. For you to make money off trading, you have to at least take the trade, right? And if you want to take the, if you need to take the trade to make money, that means you need to know how to place the trade, when to place the trade and when not to place the trade. And that's where the entries and the exit criteria come through. So every system has its own way of approaching the entries and exits. That is the first part, okay? So each and every system has a way of approaching the exits and the entries. And so, for example, you can talk about supply and demand will tell you that you'll be confident in taking the trade once you get your confirmation of a close outside the zone. That is just but one thing. That will be an entry criteria, and an exit criteria will be once the trade gets to finishes the range to the next zone, you take profit. So that is an example. Another example might be EMA magnets. For those people who use indicators, it will be a break of one of the slower moving average would mean that let's say it was in an upward trend, your buys entries will be once the EMA is broken, and you take profit will be at the next EMA that it's going to it's going to be pulled towards. So that's how you base your entries and exit criteria. But now, having that in mind, how will you judge which trading system is comfortable for you? And this is where I find most guys get confused, because they'll be expecting to find a trading system waiting for them somewhere, ready for them. But the actual thing is that you'll have to test the waters and try and see which trading system is working best for me. I'll put this into perspective and say that for me personally, my journey has been really, really bumpy, because I started on IQ options, then I went on to start trading Forex, and then I was using signals. I started with signals, then I went to trying on my own, and then I was using what do you call these things? Indicators for most part. And then once I finished up with the indicators, because I wasn't making money there, I started learning. And once I started learning, that wasn't the point that I started making money, because after I started learning, I tried new strategies. I remember I tried the EMA strategy. Didn't work for me. I went to support and resistance. It was the approach that I was using wasn't the proper one. And so the thing that people don't realize is you won't automatically find the trading system that you're looking for. But the good thing is that you don't need to worry, because as you keep learning different strategies, your view of the market changes each and every time. So with that, I'll be talking more about the entries and exits generally, and then on the next video, I'll also talk about a more personalized view of the trading system now. So even without going too deep into the topic already, I have something for you guys to note. Know all there is about market structure before diving into strategies. This is something that I see very many people lack, because they'll go on to look for trading systems, and the trading systems will be talking about the levels and support zones, resistance zones, demand zones, and all those things bundled up. If you do not know your basic market structure, the basic fundamentals, then you won't be able to navigate yourself through the trading system. Secondly is, if you get to know your trading system, always know your SL and TP levels. Stop loss and take profit levels are key if you have to have a profitable trading strategy, because a strategy that has a win rate of above 50% generally is more than okay if you apply the other two sectors of a trading strategy, which was money management and emotional. So keeping that in mind, there are two scenarios in which a trading system might revolve around. Okay, so there's the first one where the the trading system is revolving around going along with the trend. Okay, and there's one for going along with the trend. I'm so sorry. This one for going along with the trend is good, because it's all dependent on someone's perspective of it. But if you were to trade with the trend, you need to know a couple of things. Like, let me draw something here so that you guys can be able to see. Let's give an example of this drop that I've just showed here. Okay, so this is the overall trend direction in this case scenario. Okay, so what I was having for this case is, there's some pointers that I've put here, and you can see the first one is going with the trend involves the following. You need to know how to identify the major trends. In this case, this one is a bit straightforward, because I've shown you guys that the trend is downward. But in a real market scenario, which we'll take a look later, is, are you able to open up the charts and see that despite the corrections that are happening in the market, that you know that the overall trend is either bullish or bearish? And this really comes in handy when you are looking towards something like higher time frame. Let me just write it here. High time frame always prevails. And this is something that I also find a number of guys do not consider, and it is how much the higher time frame is where you'll get your overall trend. That's where you should be drawing your major support and resistance levels, your major supply and demand levels, or your trend lines, and so on and so forth. That is where you draw your zone. And so if you're able to identify major trends, that will be this now. And that means if you're trading with the trend, that means that if the trend is on a downtrend, you'd be looking for sells. And if the trend is on an uptrend, you'd be looking for buys. And so the question will come in, and at what point do I know that? Sorry. At what point do I know that? So sorry, what have I just done? Okay, just a minute. At what point do I know when to take the sell or to take the buy? And something that I see, I just want to move this a bit so that you guys can understand based off this. Okay, it can't move, but it's okay. It's because it's a screenshot, I forgot. So one thing, people, if you're looking for sells, that means you'd be looking for trades at the point of the correction of the move, because I think you guys follow some guy on Instagram called Javier. Javier has really cultivated the whole thought of people understanding that the market does not move in one direction. That means even if it is on a bullish run or a bearish run, it has to take a breather for it to capture those traders who are very indisciplined in taking their entries. And so in this example here, you'll be able to see that you'll be able to see something like, you cannot take your sells at this point because you'll be stopped out. And so your mindset will be looking for this point in a market where, once the price has started readjusting and correcting itself, that you'd be taking your sells such that you get your optimum entry and you feel that range. And then once you get the range, you finish up the trade with your take profit, and you are in and you're out in good time. So I'll re-emphasize on the point where knowing market structure is enough to govern your entries and your exits, because market structure mixed with your trading system approach will be able to give you as much money as possible from the market and reducing your loss as much as possible. Secondly is knowing what signs to look for. This one I've already talked about, but I'll re-emphasize it. What are you looking for? What is your system? What rules does your system have in terms of going with a trend? Okay, what will govern what your trend? What will govern your how to identify the trend, and what will govern your entries, and what will also govern your exits? Because now you see, if you they are the trend can be a double-edged sword, of course. So it all depends on your approach. Secondly is going against the trend, and this involves counter trending. Okay, this is basically what guys call counter trending. Like if the market is going up, you'd be either looking for reversals or you'd be trading now the corrections. And this involves the following: knowing what pivot points are and how to identify them. I don't know whether you've heard about pivot points before, but if you haven't, I'd suggest reading a simple PDF or a simple blog about someone who's written something about pivot points, and you can also find them on babypips.com. I also recommend that book because it is what helped me gain ground in understanding what the Forex market was. I'm in no way affiliated to Baby Pips, so I'll have them linked in the description. So other than that, once you know what pivot points are, you'll be able to know how to identify them, because those are the turning points in the market. Also, you'll be able to know at what point the market slows down in order to retrace. And in this market slowing down, that may mean exhaustion, getting to a certain price level, or getting to a certain zone and reversing a little bit as it retests the broken zone, or there's so much to it. And once you know that, you'll be able to say that, okay, when people are patiently waiting for them to take sells on the correction, I'll be taking buys for that correction. And the buys from that correction will be governed by the exhaustion that happened at this price level. How will I determine this price level? I'll use past price action to confirm my current price levels. I'll use my EMA magnet. Maybe if your EMA is here and there's a level here, it cannot break this level. So that means it'll have to retest this before it comes down. And such kind of approaches are what we are going to be talking about in the coming videos. How to expound more on such entries, because I'll narrow down on my own system, which is supply and demand, of which I have refined it over the course of the year of 2018. I was able to refine it really well to suit market structure, and that is trend lines and also support and resistance, able to fuse it up with supply and demand to be able to make my vision of the market is really three-dimensional, if I could say, because I can be able to see things that I wouldn't be able to see in 2017, for example. And so as I finish up on this video, I'll talk about something that will highlight something that will be the start of the next video, which I'll post just like I think 2 days from now. So before we do the next video on Friday, because I was supposed to post one on Friday and today, but what I'll do is I'll post this one today and then do the follow-up video of this one on probably on Wednesday. So you'll see this. I want you guys to look closely towards this point. This is you and the money that you have, your capital that you set aside for your trading, and this is Mr. Stop Loss. Okay, I'll also use this with regards to this scenario. So let me draw something here. Maybe you see there's that scenario. So this is let's say this is Mr. X, and Mr. X has let's say 1000 USD in his account. He's really balling. He's got 1000 USD in his account, and the only way for him to prevent the account from blowing up is if he first of all has a stop loss. Because if he does not have a stop loss, in the event that he was to run to, if in the event he was to fall down from this barrier, he'd come and Mr. SL will stop him at this point. But if he did not have this, he will end up rolling all the way until his account is zero. And so how do we determine Mr. SL? First of all, how do we determine the barriers? These barriers are what we term as something like trend lines, support and supply and demand zones, psychological levels, and so on and so forth, etc. So these things that I'm telling you as the barrier, I'll give an example of this case scenario, and you'll see that this was acting as a barrier as well as this zone here. And so if you're taking a trade with your 1000 capital and you are Mr. X, there is no way that you can take your sells at this point after confirmation and have your stop loss here. Why? Because in the event the market just takes a breather before dropping, you'll be stopped out. And that's why there's this barrier here, such that you place your stop loss where the market will not make it will not be easy for the market to actually trace back and touch your SL. But not to say that you start now because Bossman said that now you'll be placing your SL somewhere like here. No. The thing is, you have to look for a point where you place your SL such that it'll be difficult to hit, yet it's still giving you a good risk to reward ratio. Because now you see, for example, if that was your case scenario, you take your entry here and your target is to fill the range, maybe you already see that's a 1:2 ratio. In this case, 1:2 is a perfect ratio for you to trade with. So if you end up what I'll be talking about in the coming videos will be how to determine these trade barriers. Okay, how to determine these trade barriers, how to place your SL properly, how to get as much money through taking profit the right way and holding trades the right way. And this is what I'll be talking about in this trading system series that I'll be making. And so thank you guys for watching the introduction to this trading strategy, building a trading strategy. I'll have about 5 to 10 videos on this in the coming weeks. Probably by the third week I'll be done with the series. I want to have the 5 to 10 videos. And if you found this informative, I want to ask you to please drop a like, drop a comment, so that I can be able to get back to you, and also subscribe to the channel. And I hope you guys have been blessed through this video. Also, I want to say that for this particular series, I will not put out the PDF right now because there are a couple of things that I haven't talked about in this video that I would want to talk about in the coming videos. And so I'll have the PDF on the building a trading strategy after the whole series is done. I'll post it with the last trading, the last video in this series, so that people can be able to do a recap of everything else. Also, I want you guys to check out my Instagram. I'll be posting more information over there as well, and there'll be a link in the description for my Instagram and also my Google Drive for where I'll be posting up the presentations, and I'll be posting the PDFs. I think I posted the PDFs for last week, but one over there. So be sure to check them out and give it a like, give it a thumbs up, and share it with your friends if you found this useful. And I want you guys to open up your perspective on how trading is supposed to be, not how you've seen trading as from the internet, where people will talk about making money. I don't want you guys to look at it from the aspect of really making money. I want you guys to look at it from the aspect of treating trading as a business. So thank you so much, and see you guys in the next video. Peace.